Hey, what's good, family? In this video, I'm going to be showing you how I find options trades under $50 that are going to take off. But real quick, before we get in the video, if for some reason you're new here and haven't already, be sure to subscribe and hit the bell notification icons so that you don't miss any future content or live streams. And if you're interested in being notified of the trades I make when I make them, be sure to sign up for the Discord using the Patreon link down below in the description. And now, without further ado, let's get into the video. All right, so here's how this video is going to look. I'm going to start off by telling you everything that I look for in a trade. Then we're going to hop in the charts. I'm going to show you what I look for. Then after, we're going to take a look at a couple trades that I notified in the Discord today, kind of fitting this description. Now I want to set the expectation early in the video. This is not going to be something that you can do every day. This is not necessarily something that's going to be easy to do every week, but a couple times a month, honestly, that is all you need. That's probably more than all you need. And a couple times a month, you see trades so obvious that you can get in and get out and make a killing doing so. Just want to set the expectation. You're not going to be able to do these every day. So first condition, these plays that can take off like a rocket, they're going to be risky plays, high risk. Ideally, you don't put a crazy amount of money in it, hence why these are less than $50 I'm using to make these trades. First thing right there, they're going to be high risk. And because they're high risk, they're going to usually be pretty darn close to expiration. Today is Thursday at the time I'm making this video. Tomorrow is Friday, which is a day that options usually expire. So because it's so close to Friday, so close to expiration, contracts are not going to be as expensive as they are on a Monday because of something called theta or time decay. If you don't know anything about that, be sure to check out this video right here so that you can get a better understanding of options pricing. So that's the first thing, the price of the options. We want the options to be cheap. That way they have the potential to run up and kind of go crazy. But we also want them to have the potential to actually move. So we want the move to be kind of realistic, but kind of realistic for a crazy day like today was, or today is, or what we're expecting. Condition number two, and this one is oddly specific. Condition number two is that there is quad witching tomorrow. That means there are 4 major options expiration dates. So there are different options contracts expirations, some that expire every day, some that expire every week, some that expire every month, and then there are some that expire every quarter. Tomorrow, that Friday, is what's referred to as a quad witching. So they all expire on the same day. And because of that, we can expect a lot of volatility. Tomorrow's going to be wild. There's going to be wild swings. The market may shoot up to unreal levels. The market may go down to unreal levels. It may do all of that, and all because it's a major expiration day. So that is kind of the second condition. I'm expecting a big move because not everyone is thinking about it. But also, like this morning, I saw, I'm like, yo, these stocks are moving kind of funny. So me seeing that, it's like, okay, that is number two. That is the second thing. So once again, you're not going to be able to have this every day. It's not going to happen every week or every month. But tomorrow's a quad witching. There is also triple witching, which is, usually around the 3rd Friday of the month. You'll get a triple witching. But only once every 3 months, you're going to get that quad witching. So it's even bigger. So you just got to be aware of the timing and the condition. So that's condition number 2. And then condition number 3 is you got to see it set up in the chart. And that's what we're about to hop in the charts and take a look at. All right, so here we are. We are taking a look at Meta. This is one of the stocks that I took a trade on today. I believe I got in somewhere in this, maybe somewhere before like 590 or so, somewhere around that area. I saw the options were cheap and I saw, hey, this looks like it can run. And what I saw was, first off, we are in the demand zone of a high time frame. So if we go up and look, so right now we're already looking on the 4-hour chart, but on the weekly, this is where the expiration date comes into play too. So on the weekly, it is Thursday. These are weekly candles and the candles are about to close. So that means we got today and tomorrow to make the move it's going to make. All right. Right now, it's in a demand zone. It's at the bottom of the demand zone. It looks like it's still holding up. So to me, typically in a demand zone, you may catch a wick like this, but you're going to get bought up. Like, honestly, just like with charting and everything, I would expect some sort of move back up to the 650 level over the next couple weeks. All right. So since we're at the bottom of a demand zone, I think we're actually kind of like right here at the bottom. I'm like, oh, we're going to go up. So I saw this on the higher time frame. And since we were like there on the lower time frame, I believe if we actually look, probably got in about right here, maybe a little bit after it was a little bit higher. So let one candle go. Yeah, probably got in about right here on this candle, like around 590. I got in, I was able to kind of ride it, and you know, the option was cheap. So I think I specifically grabbed like a 617 option because I was looking on the, if we go to the 4 hour, I was looking at the top of the zone. I'm like, oh, there's a good chance this will be at the top of the zone by the end of tomorrow if it goes crazy. I'm like, if this goes crazy, this can really move. So it's actually something that I personally believe can still go higher. But pretty much to simplify it, the move that it looks like it could have made from the start of today to the end of tomorrow looked insane. I'm not necessarily trying to take the whole ride. I just want to ride a part of it. So if I enter at $90 and I don't see resistance to 606, that's a $15 ride I'm able to take the stock. And if I'm able to ride the option $15, that's going to be a massive move. And once again, if you don't understand options pricing, be sure to check out that video I tagged earlier in the video. That's going to explain options pricing to you a little bit better. That way you understand a little bit better the way options pricing moves. All right, so yeah, with that being said, I was expecting a large move because not only did we break the trend, but it also looked like this morning. Here, let's go back down to a lower time frame. Not only did we break the trend line, I was actually looking at a 4 hour, but I'm just showing you. So we broke the trend line and then we came back to retest it. And as the market opened, it was also kind of blasting off. So seeing that break, seeing that retest, and seeing the momentum it had at open, I'm like, oh, this is it's in a demand zone. There's a break and retest of a trend line. And then also it has momentum. This thing is ready to go. Tomorrow is the quad witching. And yeah, it looks like it's trying to get started. So yeah, when it comes down to it, those are things I essentially look for. And now that I've kind of showed you what I look for in the charts, I also, here real quick, want to show you. All right, so here we are. This is what it looks like in the Discord. This is kind of how I alert some things. All right, so this is kind of what I called out. So you'll see right here, picked up a SPY trade. Oh, and just for the record, anybody looking at joining the Discord, know that I don't do this every day. I don't throw out cheap stuff like this every day. Once again, when I see the opportunity, we take them. But this was it. So first off, picked up a SPY 571 expiring tomorrow. Paid $39 per share. All right, so pick that up. I alerted, said, hey, high risk trade, plan on swinging in the quad witching tomorrow, just to let y'all know what's up because it's risky. Next one, 11 minutes in the market, open. Everyone just picked up a 617.5 call on Meta expiring tomorrow. Paid $48 per share. All right. And then I also grabbed one on Amazon. All these went 100%. I ran out of day trades, so I couldn't take profit on Amazon. But yeah, got this one as well. And then, okay, actually I took one today. This one was a little bit later. This one actually did not run 100%. It did go up, but once again, I was also out of day trades. Couldn't take profit on it, but I still stand by what I said, grabbing the swing in the quad witching. So I grabbed like 4 trades today, and we saw them all. Now going on, SPY, I sold out at $1 per share. Meta, 48 to 268 per share. There was a point it was up 3, but I sold out when it was at 268 per share. So this trade did go 500, but I took like 450, 460 something percent on it. So hey, that's why the thumbnail looks like that, because this did go 500, but yeah, it's like 500 just looks better than 460. All right. Yeah, with that being said, these are the kind of contracts we go for. And here, real quick, just to kind of give some examples, just going in the charts, like looking at stuff. So now, looking at it right now, the day, of course, is now over. It's done. Just kind of looking at where things could go. Say I was looking at the charts. So let's say we exit out. It's actually back. Meta's actually back at this level. Honestly, I would say what I was looking at is still valid. So if I were to get back and I was trying to make some wild day trades tomorrow, here, let's hop on Robinhood and take a look real quick. All right, so here we are looking at Meta. And here we are looking at Meta's chart. So if I am looking at Meta's chart here, let's slide this over a little bit. If I am looking at Meta's chart, and let's say I really thought, okay, Meta is at 584, and let's say I think it can go to 605 since it's tomorrow. Once again, I'm going to go in with the budget. So it's like, hey, I'm not spending more than this. There's a couple ways I would look at this. Okay, I see pretty strong support at about this 579 level. So if we come back tomorrow, if we open up, market open, I see us at that 579 level, I am going to, me personally, I actually might do this. If we come to this 579 level, right here is where I would look at buying calls. So me trying to play it, let's say, okay, we're here. We come to 579. All right, and let's say, oh, we're going to retest resistance because resistance is at 605. All right, I know it might take some time. So maybe I'm like, okay, we're at support. We're going to bounce, but we may not go all the way. So I'm just trying to catch a ride. I don't need to ride it all the way here, because if you hold to the end of the day and it expires tomorrow, you're not going to make money. So get in, get out, and go. So it's pretty much, okay, it's at 579. Say 15 minutes later, there's this 13 EMA here. It's at 591. 579 to 591. What's that? Like that's an $11 move. You should be up pretty good. Honestly, that's probably 100%. And hey, I'm gonna draw it right there. Sometimes there's continued momentum. Other times it kind of dies down. Ride the momentum, ride it till it's good. Like today when I was looking at it, I was watching on the 15. After I saw the chart, whenever I saw it started doing this, I took profit. I was like, okay. And actually, it's a good thing I took profit, because had I stayed in the trade, all those gains would have been gone. All right, and going on looking at the option contracts, just to kind of simulate potential tomorrow. Going to trade Meta options. Oh, I can't even look at tomorrow's options. All right, so here we are in the handy dandy Robinhood. On my phone, we can actually see tomorrow's expiration. And all right, we're looking at the calls. Meta is currently trading at 586.67. And me personally, if I'm going in with the 0 DTE, I'm going to have a budget. All right, so going back, having that $50 budget again, I see this 607.5. That's right on budget. I can go for this. So now if we look at this, the bid is, you can see right here, it says bid, the bid is 0.45, the ask is 0.50. Pretty much that is going to be kind of the range for the trade. That's going to be, I don't know what it can do. So looking at that, bid is 45, ask is 50. One thing I'm looking at is going to be the delta. So the closer to the strike price that the stock gets, the higher that delta is going to be. But right now, I know by looking at the delta that every dollar that Meta goes up, this contract is going to increase by at least $7 each dollar that it moves closer. So if it does make that $10 move, if it does make that $10, $11 move we just made, 4 times 10, that's going to be 74 cents per share that it moves. So the contract is going to have increased by $74 right there. So once again, a $10 move, that is 74 cents. And actually it could possibly be more depending on how fast it moves. If you like stuff like that, if you want to play around with it, go ahead, add it to the watch list. I'm going to hit open. And one thing that you may or may not know is that here, while you're watching this video, is you can go to the contract, scroll down, click on simulate my returns, and simulate different conditions. So say, just looking at the conditions, right now, which is kind of impossible because options aren't open after hours, but say it does run up to that 590 or whatever I was looking at. Was it 590? I don't know. Say it runs up to 590 or whatever. Yo, the contract is up $40. Okay, hold up. The current price, where is the current price? All right, so current price is right here at about 586. Let's say it goes up to 596, right? All right, so 596, this is the projected price. Something else to look at, okay? So tomorrow is a new day, all right? So market opens. So these numbers are going to be completely different when the market opens, but just know that when the market opens tomorrow, it's going to be less because of the theta, the theta, which is time decay. So just mess around, play with this simulator just so you can see, hey, what needs to happen for me to do this? What price will it be at this time? What about this stock price? Play with that, and this will help put things together with the contract pricing. If you're interested in being notified whenever I take any trades, hey, be sure to sign up for the Discord using the Patreon link down below in the description. If you enjoyed the video or learned anything, be sure to smash the like button. If for some reason you're new here and haven't already, be sure to subscribe and hit the bell notification icon so that you don't miss any future content or live streams. And last, but certainly not least, thank you so much for watching. Manuel signing off, and I want to change your life.